Artem, you're delivering a session on corporate strategy and what is an effective way to create value for the energy industry. And this is obviously you're overseeing all of our oil and gas research now. And so what's kind of one key takeaway that you would like people, whether they're here or maybe they didn't make it to join us, what should people know about this topic?
Yeah, it's a good question. And, I think the key takeaway is actually the question which we tried to ask in our presentation. Is this the right moment for investors to start thinking differently about oil and gas strategy?
So not companies, investors.
It is more a question to the investors, exactly. Because we are now exiting from a very unusual oil and gas cycle where our entire focus has been on increased cash returns, regardless of how oil prices and commodity market fundamentals have been moving.
Capital discipline and returns to shareholders.
Absolutely. And now we are in a situation where we are basically challenging if this is the right thinking going forward. If you want Western oil and gas majors to stay relevant in the new environment where people basically argue that oil and gas will stay relevant for longer, is this the right moment to actually start increasing reinvestment rates and focusing again on traditional oil and gas metrics, like increased exploration budgets, higher organic reserve replacement ratios, etc., etc.
I mean, it leads me very nicely into my next question, which was, how has a successful strategy changed? What was maybe the characteristics of a successful strategy 10 years ago, and how has that shifted now to today?
I think it evolved a little bit more towards more balanced thinking between traditional oil and gas and low carbon part of the company's portfolio. But the companies are still struggling maybe to find a good balance between a risk-return profile, which is offered by more risky but also high return oil and gas projects, and relatively risk-free but also very policy-dependent investments in renewables and other clean tech sectors. And finding this good balance, optimal balance, is definitely the main focus of the corporate strategy these days.
Well, and I guess you touched on this a little bit in the answer to the first question, but what pressures do you see companies needing to respond to, and how should they be thinking about being flexible with their strategies as we're looking forward? What are going to be maybe the drivers of that next successful strategy?
Yeah, I think number one question which I need to answer is whether they are able and ready to maintain payout ratios at 50-60% in the new low price environment. That's one very important question which every company has to decide on. Another question is capital allocation. Which percentage of your capital should be allocated to low carbon and renewables versus oil and gas? And in the second area, I think we're definitely seeing that quite many major producers, they're moving back to more traditional oil and gas thinking at the moment.
Now, I've got to ask you though, what do we think at Rystad? Will companies be able to maintain these generous payouts if we see prices about where they are today or within where we forecast them?
I think it will be very difficult for the industry to maintain payouts at the current levels. The longer we stay, let's say in $60-65 per barrel price environments, the more likely it is that we will not only absorb this new cost-cutting announcements, which already started happening, but also the dividend yields and the frequency of the share buyback programs. I think it is quite likely to go down in 2026, 2027.
So some difficult decisions that are going to be faced by executive teams over the next months, maybe a year.
Yes.
Well, I'd wanted to ask, how fast can companies change and still bring along investors? But I'll say you kind of turned that question on its head. How fast do you think investors can wrap their heads around kind of this new reality that you've laid out earlier in the conversation?
Well, of course, it depends. It varies quite a lot with your investor mix. But when you talk about largest oil and gas majors, likes of Shell, BP, or ExxonMobil in the US, it is large institutional investors, pension funds, which account for a very large share of the capital there. And these organizations, they are not able to change too quickly just due to their size. It's absolutely normal situation, like nothing special, for the sector as such. So it will take some time. I think we already seen some indications that investors start thinking differently, but I think it will still take some time before we see, a complete conversion to new reality, and maybe a complete revival of oil and gas, a positive oil and gas sentiment in Europe.
Well, and if I can ask just one more question, which is, do investors, they might say, well, we have climate targets, we have ideas about, the way we want the energy transition to evolve. Is it necessarily incongruous for them to both support oil and gas growth as well as maintain their outlook on lowering emissions, or can those two fit together?
Yeah. I think there is just a growing consensus that energy transition, from a macro point of view, is not happening as quickly as we expected 5-6 years ago. This doesn't mean that transition is not happening, because it is happening. Electric vehicles, the adoption is increasing. Penetration, integration of renewables, variable renewables like solar and wind into the power mix is accelerated. And this is happening just because the technology is getting cheaper and better. So this process will continue, but it will take much longer time to see tangible slowdown in oil or even natural gas consumption compared to what people anticipated 5-6 years ago. And I think we're still not at the point where everyone accepted that it will take longer time. And that's what I was talking about when I said basically that investor community will need to gradually adapt to the new market reality.
Well, Artem, fascinating topic. Thank you so much for joining us here on the Debrief, and I hope I can look forward to a conversation here at the summit with you next year.
Thank you, Noah.